All right, you ladies and gentlemen, welcome into a Manic Monday. And boy, was it a Manic Monday. Unbelievable slaughterhouse that it was in the markets. And I was not immune to it at all. And so a lot of people on YouTube were like, oh, you chicken, oh, you sissy, oh, you whatever, you didn't post your daily results. Well, screw you, pal. Yes, I do. I don't care what you think. I am going to post my results and let you see for yourself how bad it was. But I'm going to tell you this, and this is just me, and it's always been me. I am not an old, pitiful me. Oh, woe is me. I'm going to waller in the slop and get down with the hogs. I am not that kind of person. I am very, very, very excited about what happened today as far as a learning experience. So let me get down to what happened in my accounts and show you because it was ugly. All right. First of all, let's do this account. All right. This is the Crimson account. Now, when I first did it today, I was at $68,000. We were at 127 on the 29th. That is a loss of $59,000 on the day. Now, that sucks. But fortunately, let me pull this over here. We didn't end up there. Fortunately, we ended up at 81, 716.71. So let me put that one in there. So that's not bad. 81, 716. I mean, hold on a minute. Let me move it before we see here. Hold on. Where'd it go? Where's my snip? Here we go. Let me move my snip. So fortunately, we ended up with the losses altogether to start with were over $119,000. I mean, it was bad, y'all. So now we're 81, 716.71. It's only $46,000 down. Okay. Big deal, right? It's money. And that's a big loss. That's a big booger there. So that one is that. So let's see, the next one that we had was this one might be is the mega account. Now, the mega account was ugly too. Now, I did not do one at the beginning of the market on this one. All right, 276. Today is 8524, and we were at, let me pull this one down, 245.33. 245.33. 245.33. Ouch. Ouch, 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 ouch. Right? So for the year now, we're down $4,164. Okay. Big deal, right? Big deal. Big meatball. I'm not gonna glass over. That's big meatball. $35,000 is big. Now, the one that was really something. Now, y'all would be surprised with this one. Here's the one that was shocking. This one, ladies and gentlemen. Now, if you'll recall, this is the one that had the 33 negative short puts of the Black Swan hedge that should have never been put on. Never been put on. But I put them on. You know, it's before I knew how to use the analyze tool. So this was on 8.4. It was that. So 8.5 today is. Now, let me talk to you about this one for a second. This one was nerve wracking because before the market opened, when I was up, I don't know what time did I go live with y'all? 7:30, 8 o'clock this morning, something like that, 8:30. I forget when it was. This account was a net lick of negative $20,000. Now, I want to make sure everybody understands that. That means, hey, we're going to owe Tasty $20,000. And y'all, we got Tasty on the phone, if you'll remember this morning. And we're basically like, we can't close anything. And they were like this. They said this, you are at the whim of the market. Whatever the market is doing, that's where you're at. And I'm like, so we can't put orders in, we can't do anything. No. So it was a tedious, it was a stressful time there when we could not close positions and we couldn't make any moves futures wise or anything. Now, I made moves today. Yes, I did. I made moves today in order to preserve the accounts and to preserve capital. And I guess I'm most excited about this one. So this one, hold on a second. I got to get the net lick on this one because it was negative 20,000. let me get it for you here. Let's see, it is. Oh, daggone it. Here we go. This one is. Oh, hey. Give me a second. All my stuff is random. This one is 27, 6, 15, 11. Now you don't believe it. I know some of y'all are sitting there going, Bobby, you must put money in the account. I swear, God's witness. This one is 27, 6, 15, 11. Praise the Lord. Down 4,671. Now keep in mind, it was negative 20,000 and there was nothing that I could do. Now, what did I do in my trades? All right. What did I do today in order to save the accounts? What I did, and I didn't do much of it, is I waited until the account was moving upward, right? Now, how did I know it was moving upward? I didn't. I really didn't. But I sold futures last night in these accounts. I sold futures and I sold futures, I think, when the market was down like 1.5% or so. I go, oh no, it's going to be one of those days. And indeed, ladies and gentlemen, when I woke up this morning, the market was down over 4%. Over 4%. So I was like, geez Louise, I didn't sell enough futures. So what I did is I sold some more futures to get my deltas in line. Now, here's what we need to look at tonight. I basically closed all of the 111 naked puts. I closed all of them, all of them. Now, I am not sure if I am reestablishing. I'm not sure if I am rolling. I'm not sure if I'm just going to leave them out. But now what we have in the account is, let's see, negative 272 on the Crimson account. On, let's see, that account we don't trade publicly. This one has negative 1390 deltas, right? Now the bad part is it's got negative theta. So what I'm going to do tomorrow, I want everybody to know the plan tomorrow. And then the one that blew out totally until it came back was negative 584. Now notice that negative theta, which will work against me. What we're going to do tomorrow is we're going to basically use the analyze tool in tasting. Now let me just show you what we're going to do because it's going to be really good. What we're going to do is we're going to look at my current hedges. And if you can look at here, what we've got now is this. Oh, let me show you that. Let's look at this so we can show it. Positions in, let's see if I can do all three accounts. 72, and let's do this account and see if it'll show the what it looks like in all three of those accounts. Those are the three that we trade publicly. Let's look at the P&L in these accounts. I want you to look at it just for a second. I pray to God that the market crashes. Now you're probably saying, Bobby, it's not going to crash. The market's probably going to correct. The market's going to do whatever. That's fine, baby. That's fine. But I'm basically here saying I am set up, baby, for this thing if it does, right? If it does, one standard deviation, it's not that bad. But if it goes 2 standard deviations down and there's World War III, then I am ready for it to the tune of what, $2.5 million. So we are good. I am ready. I am ready for the fall. If this continues to happen, I'm good to go. Now, what we're going to do, I don't know if this thing will let me draw on it or not. Let's see. Will this let me draw? Yeah, well, what we're going to do is now see how many short puts I can do. I want to put in some short puts versus this wall. This is the wall that we've talked about and talked about and talked about, the wall that we wanted of protection. And what I'm going to do is to see how much premium I can sell to still generate a little profit this way, but not as much profit this way. In other words, we want this to go from the way it is now to this. Everybody see what I mean? So what we're going to do is figure out a requisite amount of short puts that I can trade. And again, I hope we have another good down night tonight, or maybe the next day or two, which is a real good opportunity to sell additional short puts. And to basically say, okay, we don't want the $10 million on the thing. We want it to be less, but we want to be able to collect premium too, because it's a great time to sell premium. So this is what we're going to do. We're going to try to maintain that 3 by 5, 3 shorts, 5 longs, to give us that golden ratio. And right now, I forget what the ratio is, but I think in one account I did this. Let's see, I had in one account now, I have 105 shorts, and I have 225 longs. All right. Now that's as fully transparent as I can possibly be on my account. Who has questions? Y'all got a question? Bobby, what did you learn? Well, I can say what I learned is the 1-1X trade was not as resilient. That's what we thought it was. But I'm also glad that I was in the 1-1-1s and not the 1-1-2s, because I had less notional risk. I did not expect the trade to do as bad for a 4% move down. Now, I know we had a 2% move down the other day, and we had another one, whatever, move down, and who knows what it is altogether to move down. But I thought that the trade would be a little more resilient than that. Second thing that I learned is that, and I should have known this from March of 2020, the Sweet Bobby hedge, Black Swan hedge, whatever you want to call it, does extraordinarily well when there's a big uptick in VIX, even though the market does not get anywhere near the short puts, anywhere near the hedge, it does extraordinarily well. It's a really, really good trade. So it's very one that I think that what we need to do for the remainder of the year is to focus on building a campaign up before the turbulent election. Was it mainly due to the amount of VIX that moved up quick as it did? Yeah, it was VIX. It was not necessarily the movement. You're right, John. But for this big of a move, which was not that big of a move, the VIX was just unbelievable, y'all. I mean, let's look at it today. It went above 60, I think. Let's look at the VIX for today. And you can see, let's see, where is VIX? VIXy, VIXy, VIXy. Let me close this. Let's click on VIX. Let's go to the chart. Look at this. 65. It was over 65, y'all, today. And had it stayed there, I would have blown out an account today. I would have blown out an account. There was nothing I could have done about it. I was a sitting duck. I was at the mercy of the market. And had VIX not come back down to 38, I was gone. Now, only in one account, not in all accounts. One account would have been blown up. Wow. And that all had to do with those 33 puts that I could have closed the other day, if you'll remember, for a $200 loss. Ouch. All right, now who's got questions? I'm curious, those of you that did 1-1-2s, did y'all fare better or worse than I did today? Percentage-wise. Y'all gonna be quiet today? All right. If there's no other questions, then that will conclude it today. But I'm very, very optimistic going forward. Am I finished with the 1-1-1s? No. Am I going to concentrate more on the Sweet Bobby hedge, the Black Swan hedges? Yes. And campaigning those for sure. Because it's just a matter of time before we do this. Oh, I was going to show y'all this. So we showed Mike today, right? And how he made $200,000 with the Sweet Bobby hedge. And he sent me a thing. He went and asked ChatGPT or Meta AI He says, how many times has the VIX spiked 40 points like in a day? And the answer was this: the VIX, also known as the CBOE Volatility Index, has spiked 40 points or more on several occasions. Here's the notable instances. So this is not all of the instances, but the notable instances. The 2008 global financial crisis, the VIX surged from 20 to 80, a 60-point increase in October of 2008. The 2010 flash crash on May 6, 2010, the VIX jumped from 22 to 45, a 23-point increase in a matter of minutes. 2011 European debt crisis, the VIX rose from 25 to 45, a 20-point increase in August of 2011. 2015, the China stock market crash. On August 24, 2015, the VIX spiked from 13 to 40, a 27-point increase. And during the COVID-19 pandemic, the VIX surged from 15 to 85, a 70-point increase in March of 2020. Please note these instances are not exhaustive, and the VIX has likely spiked 40 points or more on other occasions. And so that would be worth doing a little research on. Let's see. Joshua says, I was about 30% down. 112 last night, had to close all naked puts. Well, if you closed it all, oh, you made it all back this morning with your hedges. Oh, good. So, Joshua, what you did is you closed yours last night. You're like, screw this. I'm not sitting through this. And rather than me doing that last night, I sat through it with the futures, which was not as good of an idea as what you did. So you made it all back this morning with hedges. Wow. What a day. What a day. That's excellent. Good trading out of you. You had 500% losses. Wow. Wow. Yeah. Anyone else want to share how they did this morning? Yeah, I'm gonna tell you something. There is nobody on YouTube or Facebook or anything that will ever say that I hide anything. How many damn times have I showed account numbers? Jesus, I do it all the time. But I want you guys to know that indeed these account balances are what happened. The P&L was negative 59 to 60,000, something like that. It was much worse. When I looked at it, it was down 119,000, and one account was totally blown up. Thank God it recovered. Totally out of my hands. There was nothing I could do. Nothing. All right, anyone got any questions on what you've got to do? Connor says it was bad. My hedges were insufficient, and like you, if we stayed at 60 VIX, I would have been smoked. Yeah, yeah. I did not like me sitting here on the phone with Tasty going, there is nothing I can do. I am up to the whims of the market. So anyway, we traded too big, y'all. We traded too big. So there's going to be lessons learned from this. So it's okay. Remember, lose the money, don't lose the lesson. And by the way, it's just money. It's just money. Yeah, man, it's a great eye opener of how risky the market can be. It will humble all of us. And I am humbled that you guys are here. I appreciate all of these joining in, and I appreciate you being a part of our community. And I'm as transparent as I can possibly be. I tell you one thing, ain't everybody else getting on here telling you how much they lost. Yeah, our risk is the VIX. It's not really the move. It's the increase in the VIX. Exactly. All right, guys. Love you to pieces. Y'all have a good day. I will see y'all. Because we are not blown out. We are trading. Yes, indeed.